How do you know when a community's about to turn the corner? Stay tuned and I'll show you how. So in real estate investment circles, Fall River has always been considered an emerging market. In that type of situation, you need a higher return because you're gonna walk into a dumpster fire, basically, right? Like you're gonna walk into a building that's a complete disarray. You're gonna have to come in as the investor, be very hands-on, right? Kick people out, improve the units, get the rents up, stabilize the asset, and generate the return. And today's case study is a perfect example of that. We have a 6-unit building. It's been a long-term owner, a solid group of tenants, building's immaculately maintained, and the rents are where I would have put the rents. So a lot of these buildings that we're seeing now with other investors, and you'll see in some of these other case studies, they're priced where they should be, but the rents are here. So I have to come in as the management company and work with the tenants and get the rents up so the investor can get the return that they paid for. But this situation, the return's already there on day one. So we have 6 units in this property. We got 4 4-bedroom townhouses, which is I've never seen in any of these buildings, by the way, a 3-bedroom apartment and a 2-bedroom apartment. So the 4-bedroom townhouses have rents that range from $1,800 to $2,000 a month. Very good rents. Probably a little room to grow there, but I think they're solid rents and justify the price. So the 3-bedroom is doing $1,550 and the 1-bedroom is doing $1,350. When we're evaluating buildings, like how do you compare a 3-unit in Providence to a 6-unit in Fall River to a 12-unit in New Bedford? Like, how do you level that out? And so in real estate investing, we use what's called a cap rate, because a 12-unit intrinsically may seem better than the 3-unit, but what if the 3-unit has a higher rate of return? The income, which are the rents, you subtract the expenses, which leaves you a net operating income, and you divide that by the purchase price. So in this particular property, we have a yearly net operating income of about $86,000. That's the income minus the expenses. We divide that by our $1.2 million list price. That gives us a little over 7% rate of return. So in a city like Fall River now, that's the sweet spot. So the lower the rate of return, the less risk. The higher the rate of return, the more risk the investor is willing to accept. Now, what's happening in Fall River? I mean, if you take the 30,000-foot view, we know all the factors, right? The waterfront's getting redeveloped, the trains obviously coming, all the commercial development happening in the city, all the high-end market rate apartments throughout the city. This area, we have a couple of mills that have been redone, right? Curtain lofts, a couple on Alden Street. There's a huge apartment complex that an investor in Boston recently purchased, invested over $5 million in this neighborhood. So that's a good sign. That's what you want to see. For the investor on this project, there's some upside as well from appreciation because of what's happening in the very tight vicinity around it. Oh yeah, this building's for sale. $1.2 million on the market now. I'm putting my cell phone number on the screen. If you're an investor and you want to grow your portfolio and this is the type of asset you're looking for, let's connect. Invest in Fall River is the movement. We're pushing our city hard. It's growing fast, all right? I'd love to connect with you and see how we can help you grow.